How you doing? My name is Chate. I am a student at a university in Tennessee, and I am actually a finance student. Just changed my major from accounting to finance. It's something I'm finding I enjoy a little bit more. Not really liking the so much tediousness with accounting. I should have my minor though in accounting with my major in finance now. So I'm going to talk about a stock. So I'm in an let me kind of backpedal a little bit. I'm in a investment challenge class. In the investment challenge class, it's an elective class for my school. They give us $750,000 as a class to trade as a portfolio and to try, because they are retirement accounts, and to try and grow them for the personnel, for the money for the company. I'm not too sure exactly how it works. In saying that, you apply for the class, and they kind of make a little choosings of who joins the class. And most of them were finance students. I joined as an accounting student in the class, and I actually found a like doing this kind of work, especially evolving in this type of work uh, later on down the road. In saying that, I am part of the consumer discretionary sector. I share it with another student. Um, I think they were trying to give me, I can't even remember the sector right now. I want to say energy, but it wasn't energy. In saying that, um, we're just going to kind of go over a stock I chose. The application I also used to kind of get an idea if this was a decent stock. The company that owns that app, Everything Money, they do not agree. They will not agree with Tesla, and I'm okay with that. Difference of opinions. They did talk me back from being 100% in Tesla as I was for a while. Well, I was more like 90%. In saying that, I always kept a little bit of cash. Um, Tesla did bring me great returns. I was investing back in 2019, the late 2019, prior to the crash, when everyone was saying it was over priced then, and it has blown up ever since. And we all know it is a big part of stimulus, and stimulus monetary policies through quantitative easing for the market, for what the Federal Reserve has been doing, and also just straight stimulus to the people. So the markets are inflated, but I don't understand that stuff yet. Again, I'm a student, so we'll work towards that. In saying that, I did pitch Tesla. This is my second stock pitch. I did try and do Baba. They turned that down, Alibaba. So I came for what everyone likes, is Tesla. Um, in the TVA investment challenge, it is a challenge. We are going against other universities, part of it, and I knew I've always been in Tesla, but it was kind of expensive. I think it was at like 890 then, and it has shot up to 1200. I thought it was a little bit more. I thought it was expensive then a little bit, but what do I know, right? But we are going to kind of just go over the sector that I am watching. So um, we'll start off with a sector review. We're just going to kind of go over the sector, our school, consumer discretionary. Right now we have Home Depot, Nike, Target, Tractor Supply, and we did buy Dick's Sporting Goods. We're allowed to have a weight of 15% in our account, which I think we have trimmed Nike now. We had 145 shares. We have trimmed that. That's bugging. Let's make that a little bit more squared away. In saying that, we did trim that off. I'm pretty sure my Nike's gone. I don't believe we have Nike anymore, so that brought us down. So with Dick's and Tesla, we'll get into that. I think we're sitting right about 12%, a little bit underweight, which is okay. We're waiting for Tesla's dip again, and I'll explain that again. So sector fundamentals, this is within all the companies in this S&P 500 of the consumer discretion S&P 500. I apologize. In saying that, the PE, average PE is 35. They're estimating that this next year is going to be around 30, as I assume some corrections happen. In saying that, I want you to keep that PE ratio, or PE, yeah, ratio in your head for when we talk about Tesla's PE later on. Also, the enterprise value is 604 billion. I believe that also plays in a key, because right now Tesla is valuated at 1 trillion. I think it's 1.1 trillion right now, actually. In saying that, the earnings per share average is 14.53. I really don't even know Tesla. I just looked it up probably a week ago, and I can't quite remember. Earnings per share for growth. So this just kind of gives you the average. You're going to see it in the consumer discretionary. You're going to see the total debt to equity quite a bit higher, and that's more just because, like, if you think of all these stores, they all have a brick and mortar location. Every single one costs a lot of money to get those going. Home Depot, Nike, Target, Tractor Supply. I think it's not Nike, but we have an Under Armour where I'm from in Tennessee off the highway, and it's a giant facility. So I can only assume Nike has something like that. Gotta enjoy that coffee. All right. So on consumer discretionary, I compared it to the S&P 500. S&P 500 is the red line. The consumer discretionary ETF type. XLY is this blue. This is right in the peak happened. This was probably about 2 weeks ago, maybe a week and a half ago, where it has seen a surge because of the holidays. So I want us to keep note of this because this time next year, I'm hoping to be prepared a little bit with a little bit of cash to kind of jump into retail and whatnot and kind of figure out where I want to go with that. Being said, stocks that I wish I would have gone into was a little bit more in the sporting goods. I put a lot of tracker stocks tracker where I'll just buy one share and I'll just track it. And I have 30% gains in all those. And I had Hibbett Sports, Dick's Sporting is good, Academy Sports, and they've all been doing pretty good. Dick's lagging a little bit, but that's more of it's because it's more expensive stock. For some people, it doesn't equal out. Anyways, Tesla. Their high they've ever gotten into this 12 weeks is pretty wild. It is $1,243, and in saying that's extremely high. There was a point where Tesla was 80% of my portfolio. In saying that, I did pretty much sell everything at one point at about $910 a share post split. So, and we were buying about $184 was our cost average post split, so we're doing just fine. In saying that, when I made this video, why notifications? In saying that the previous close was 12 when I did this, yeah. So all these numbers are from a couple weeks ago, about a week and a half ago. These were taking the weekend. This was pretty much created the weekend that Elon made a Twitter post. So these are the 50-day SMAs. Everyone saw it shooting up. Elon makes a tweet about right in here, and we'll look over it again. This is your 20-day purple, 50, 100, 200 is what I have. This is their 10Qs, just their quarters, just kind of showing how they're doing. I kind of just like to keep an eye on their total assets, total liabilities, see how they're growing. Both have grown. Well, not necessarily. Their total assets have actually declined slightly, but their total liabilities have increased. But hypothetically, if they needed to liquidate everything and pay everything off, they have enough to cover it. So don't see that happening, but it's, you know what I mean. Just kind of a little check, right? A little check mark on there. Just kind of make sure. Again, we already did that. So whoop, results on operations. I don't know if you guys can see these numbers. I can't make them any bigger. They're not my numbers. When I try and make it that way, it makes it even stretched out and harder to see, I believe. So I'm just going to kind of say these numbers. So automotive sales and automotive leasing, the total automotive revenues increase was 58% for the 3 months. For the 9 months, it was 74% increase. So really pretty, wow. 74% increase, which tells you that quite a bit more people are starting to buy. But the prices of Tesla has also gone up. So I wonder who else can afford them to a certain point. They're not cheap cars up front, short term. In the long term, they're fine. Let's see what else we got. Services and other. Those have increased 54% for the 3 months, 68% for the 9 months. Let's see, total automotive services and other segment revenue. Pretty much everything has gone up for about, well, roughly 50% average. Total revenues, it says right here, has gone up 57% for the 3 months and 74% for the 9 months. So consolidated statements of operations, we just kind of look at their revenues, cost of revenues, their net income, right? What's their net income doing? And their net income, pretty much over the 3 months compared, uh, wow, has pretty much about fivefold, has gone up by 5 times. So it looks like it was 369 million, and now it is 1.65 billion roughly. Okay, so that's a big increase in their net income. That's insane. This is kind of where the companies are, I think, is going to start kind of capitalizing on their cost basis, on their cost savings here in the next couple of years. This is where you're going to start seeing their profit margins and everything going up. And this is kind of what we're good at. In saying that, we come to Everything Money Stock Analyzer tool. Okay, this is their platform. I pay monthly for this. I do like it because it gives you the discounted cash flow value. It kind of saves you from doing the math yourself. With that being said, I had to let my professor know because he wants to know what kind of what the rate is. You have to go with your desired annual return, is what I assume they're using for their rate, uh, in the formula of the discounted cash flow. And saying that, I did go a little bit different with the assumptions and everything with Tesla. I went 5 years instead of 7 or 10 because I think by 2025, that's where I'm kind of looking at with Tesla right now. 3 to 5 years. It's 2021, so um, the revenue growth right now they're averaging for the past 5 years 44%. So I put 35, 40, 50. Share change, they are diluting people by splits and distributing shares. So I put 2, 3, 4. And the reason I do think there might be one more split coming, but I don't think there would be too much more. As in, and the reason is that if I had the video right now, but Elon Musk in his last earnings shareholders meeting, they asked about a split, and he even said he didn't see one coming anytime soon. So I'm surprised a lot of people are assuming there is one right now, but I'm not. I don't know. In saying that, profit margin right now, you can, I don't know if you can see that, but anyways, it's saying that it's only at about 7%. As you can see, it's actually starting to increase to about 12%. I think this is where the company is going to start capitalizing on all their hard work with the profit margins, turning profit. Everything's going to start increasing these next few years more and more. So I just put 11, 15, 20. Free cash flow margin, I did the same, 11, 15, 20. Um, Now, the PE, price to earnings ratio, this is kind of the where I'm not too sure. I think you're always going to pay a premium for Tesla. So I did. These are pretty wild. Anyways, I put for the low, I put 40. This is also for the price to free cash flow. I put 40, 40, 50, 50, 60, 60. I do think 50 price to earnings. You will be paying a premium for a while for Tesla. Um, I just, yeah. I think theirs was like 20, 30. I don't. They're comparing to the cars. I don't think that you can compare this to a car company here, and the reason is why. If you take Apple without any splits, it is a $28,000 stock. Where's my phone? Oh! I don't even have it on me. I don't even have my phone on me right now. But it is an Apple. It's a phone. This is a car. There is a lot more profit margin, profit in a phone than a car. But these cars drive for you. That is huge. So, and I know that sounds a little bit naive to the situation because it's like, yeah, every car will do that. I think I have a 2022 Honda Civic that has a little assistance to drive, and it's not very good. If you compare my car to a 2022 Tesla, Tesla outperforms it by 5 years easy. So, um, you pay the price for it, but yeah. In saying that, the assumptions in this, I just think you're always going to pay a premium. I think their PE is always going to be up around the 40s, 50s for the next 5 to 10 years, just because the growth they're having right now. That'll be explained here coming up soon. Um, I just think you're always going to pay a premium, and I think their PE is going to set between 40 to 50 for the next definitely 5 years. I really do believe that. In saying that, this is what it's saying is saying we should pay about $1,016 a share for a 15% annual return for our midest guess of 40% revenue growth. That's I really do see that. The revenue growth that we saw right here was 57%. So yeah, I do agree. I agree 40% is pretty safe for the next 3 to 5 years. I'm not saying this company is going to grow like this forever, because there's going to be a point where it kind of stagnates. Everything stagnates. So this was a video of pretty much Elon Musk, his brother sold. So I'm presenting this to the students, and I put good news. Elon Musk, his brother, and executives are selling shares in a lot. So if you went to Forum 4's on Tesla's page, you can pretty much, I went back about 2 years, kind of see a couple people selling around the same times. Elon's brother's, I think it was $1,180. I can't quite remember. I know that he sold $108 million worth this past time. And pretty much every time, I'll show that, pretty much every time he has sold, there has been a correction in the stock. In saying that, this is also one of the biggest sales he's ever done, which is a big indicator that this could be a bigger drop than what we're seeing right now. Right now, I think it was at 18% from its highs, maybe 22%. We'll look at it in a second. In saying that, Elon Musk, this is where he went on Twitter and asked everyone, should he pay, sell 10% of his Tesla stock to pay his tax avoidance, as they were saying. Everyone voted yes. So he started selling roughly, I think his first lot was like 4 or 5 million shares in the first day. I can't quite remember, and broken down that way. These are pretty much indicators of each time Kimball Musk has sold. And if you can see, there has been a drastic drop. This one, I believe, took about 2 to 3 weeks to happen. This one took a couple, like 2 months to happen. But there's always been a drop. There's been a pretty drastic 50% drop. We were up here when he sold, and there has now been even a further drop. I think we're right back down in here. In saying that, I think there's even a bigger drop coming right now. Let me see what Tesla is. Can I bring it over? So let's look at Tesla just real quick. It's at 1,100. So if you look at these that I'm talking about, let's remove this just for a minute. This is where the split was going to happen. It climbed, shot up, split, shot back down about 50% or whatnot. But his brother sold right in here somewhere. It consolidated, shot up, had great news. This was the S&P inclusion, 50% reduction. His brother sold right up here. And then right in here, oh, well, you can't even see it, but his brother sold right up in here somewhere. I think it was right in here on the 5th. Well, it says he sold right in here. So big drastic drop, 20%, with a rebound of speculation of a stock split coming again, but I'm not too sure if that's going to happen. No one really knows. I do see Tesla kind of have a consolidation, kind of right around $1,000, $990. I also think that at some point it may have a little bump a little bit further, maybe the 975s, because there's a big gap right there. Anyways, let's go back. So Tesla Catalyst. I wanted to kind of go over their growth. So if we're on 2022, and this is kind of where they're saying we're at, the compact models in 2023 are going to start hitting hard, 2024, 2025. And that's where the college students, younger people, I don't want to even just say that, younger people, probably 19 to maybe 27 age, will probably be buying these compact cars because they're way cheaper on their budget. These more mid-size and Model 3 variants, and one's a little bit extra, I think people around their 30s or so will be buying those. People who are well established in their careers or financial being, their wealth to afford a vehicle. So, in saying that, these are the Catalyst, Austin, Berlin, Gigafactories, 500,000 cars roughly are going to be uh, made per year from there, which means they'll have availability. I think it's like a 1.5 million a year or 1 million. I do not have the facts on that, but I believe it's around that. And that's just the beginning. So, infrastructure bill to include the 8K credit. Tesla, I think it recently passed the House, but not the Senate yet. I believe they actually divided them into two. Actually, the first one passed with the Senate and House signed by Biden, but that did not include the EV credit yet. Once that passes, it'll also pretty much you're going to be getting a full self-driving for what, $2,000. So that'll be pretty good. As for the they're estimating that it could be a robo-taxi and drive for you and make passive income per se. I'd say probably around the 2026 to 2030 range. We'll see. It might be sooner. That's just a theory. Full self-driving. So Tesla, I believe, is in the L3 and a half type, right in here range. I'm not 100% again on that. I can almost tell you the Honda I have right now is about 0.5 level 1. So Tesla's well ahead, and Honda's a great company. That's the thing. I think both companies are a great company. Honda's always had a great engine, great vehicles. You always see them on the roads. Honda. I think Honda's a great vehicle, long lasting. It's just like a Toyota. So yeah, I also think Tesla is just quite a bit different. It's an innovative, very innovative company. I just say so. In my Honda, I have put on 5,000 miles. I think it says I've driven for like 45 hours. That's a lot of hours I have put into that, and mindless just driving, just going. Yeah, I mean, you can see so many views so many times, but when you drive the same thing every day, it's a waste of time to it per se. So he's giving that time back to millions of people when they buy a Tesla and it's driving for them. You can pretty much just kind of keep your eye on the road at some point. I'm assuming around the level 4, level 5. Um, you just have to keep an eye on the road here and there. You can do what you need to do, work, whatever you want to do. You now have spare time. Hundreds of hours in just 5,000 miles. So I think it's going to save a lot more than that. People are going to capitalize on that. That's just their full self-driving. Their cars are pretty good too. They're supposed to. I think the 4680 is supposed to last 500,000 miles. Is with the estimation the life expectancy of the battery. That's a motor of up to 500,000. That's a 25-year lifespan roughly. It may be 30. You may never have to buy a car again. The average human buys one every like 3 to 5 years, but anyways, Cybertruck release. I've looked at a Cybertruck. If I was to get a vehicle, it would be a Cybertruck, but it would not be until probably 2026 when I can actually maybe get one. Tesla semi-truck. And also, about the Cybertruck, and that's just so they can work the kinks out if I can ever get one. And I think the price will reduce to a certain point. So, this is my Tesla stock proposal for the class. I asked them to buy around the 950 range. Again, I presented this to the class prior to it dropping down to 984 recently. In saying that, I wanted a limit order in the range, $950 range, give or take $20. I wanted to try and get 20 shares because if there is a stock split, I'm assuming they do a 5 for 1, give us 100 shares. We could then practice with that on derivatives, option play pretty much. Part of my proposal was also to sell Nike 100 shares of them. We have 145. I wanted to keep 45 shares because we bought Dick's. I saw the partnership, but the partner in Consumer Discretionary put a limit order to sell at 170, and I think it hit at 170 when he sold all 145 shares. So, in saying that, I also gave him the option of a market order of $1,170 for 16 shares of Tesla, potential of $1,400 price target. I got the price targets from like Weevil, Jeffries, JP Morgan, Deutsche Bank. I think that's supposed to be BK. It might be DK. Morgan Stanley. I also follow someone on Twitter, um, Gary Black. He's pretty known for Tesla and his FFND fund. He is a Harvard Business School of Finance and the Wharton School of Finance. So I take his analyses of the companies pretty serious. He's been pretty accurate. I have been following him for about, man, it's been a while, like 14 months. Probably right after the drop, right after the COVID drop. I can't quite remember. It was right around that, so it's probably been around that long. He's been pretty accurate on most of his calls. Um, in saying that, I did take his $1,400 price target pretty serious on that. He believes that. Um, I believe we should have done that. We did not do that. We agreed to this, but I wanted to wait around more of the 950 range. As you guys can see, we will go back to this. It's not at the 950 range. So what has happened is it went down to about 990, 985. I thought I was going to keep dipping. Anyways, we put an order of 10 shares, so $10,000 at the $1,000 range. I think it was back here. Yeah, it was right around this day we bought it. It was at $1,000 a share. We bought 10 shares. We were going to buy more. I wanted the 950. I wanted it. And we might have missed the train because the Golden Cross happened. And as you can see, it has been riding the 20, 50, and 100 day pretty well. And I don't think it's going anywhere. So, in saying that, that's my analysis of Tesla. I do believe it's a buy at 950 to $1,000. Um, right now, I think it's still overvalued personally, as in like risk to reward to a certain extent. There's only about 20-30%, but I do think there's going to be a 20-30% decrease. And why is because the moving averages are so far apart. If you look at the 20-day moving average, which we can't even see, what is it? It's like $1,092 is the 20, and then the 50-day is 910. There's just such a gap in between those that I think that this at any point can sit. I don't think it'll go below that, but I do think it could touch um, the 50-day anytime. Anytime I kind of want to go ping off it, right? So that's a big drop. That's a 25% drop, isn't it? 18%. Oh, 21%. Wow. What is? Yeah, that's 21% drop. So pretty much, yeah. No. Mm-mm. I'd wait. I'm gonna wait before I buy back in myself. I might even, yeah, no. So yeah, that's all I kind of want to go by. I think it'll ping back down here at some point. I could be wrong, but that 50-day, I really do. I think once that 50-day hits about 950, it's probably gonna hit somewhere down here again. So that's my theory on Tesla.